Good evening. Welcome to Vantage Point, the first of its kind investment talk show in Sri Lanka. I'm Ashani Wijayatunga, and joining with me here today is Mr. Chamikara Gunawardana, the founder of Investor Eye Private Limited, the pioneering, independent, bilingual investment research firm in Sri Lanka. Now, Mr. Chamikara has over 10 years of experience in the capital market industry with both local and foreign experience under his belt. He has worked for 4 recognized stockbrokering companies in Sri Lanka. Starting his career as a research analyst, he went on to spearhead the investment research division as a head of research in 2 leading brokerages. He also has international equity research experience, having worked at the largest independent equity research provider in Australia, AG's Equity Research, covering Australian and Indian market. Mr. Gunawardana, it's our pleasure to have you here as our key resource personnel. So welcome to the show.
Thank you, Ashani. It's a pleasure to be here.
Being the first broadcast program of Vantage Point, I believe our viewers are keen to know what Vantage Point is. So how do you differentiate Vantage Point from any other business or investment TV programs? And what benefits would our viewers gain by watching this program?
Thank you so much for that wonderful introduction, Ashani. Well, I think it is a very pertinent question to answer in detail. But for us to clearly elaborate on the uniqueness and importance of this program, it is next to impossible for us to talk about the program without talking about the organization I'm representing. So, which is Investor Eye, the pioneering independent investment research in Sri Lanka, which is not only the independent research firm, but also a bilingual investment research provider. We also pioneered a very novel investment talk show in Sri Lanka Broadcasting Corporation in Sinhala and English languages. Why I am saying that is because a quality of a program like this depends a lot on not only on the qualification and experience of the resource person who is conducting this program, but also on the independence of the resource person, not just the resource person, but also the organization that he is representing, and the content structure of the program and the continuity of the program. Let me explain one by one. When I say independent, the independence of the resource person, what I mean is the resource person who is representing a program like this, which is related to the stock market, that person has to be a neutral person representing a neutral organization, which means he or she and the organization that he is representing should not have any vested interest in the stock market, financial or business interest.
So means like they should not trade in the stock market?
Yeah, absolutely. They should not trade. And we are the only independent investment research provider in this country. So when somebody claims that he or she and the organization is independent, he has to define what independence means. The way we define ourselves is that the owners of this organization, the management of the organization, not only owners and management, but also the staff of the organization, do not invest or trade in the share market at all. Because for the simple fact that being a specialized research firm, if the owner, management or staff of the organization trades or invests in the share market, they are exploiting an undue advantage they have got because they are privy to certain price sensitive information which the rest of the market are not. So it becomes extremely unfair if they invest or trade in the stock market with that exclusive information in hand. So I categorically say none of our staff, including myself, trade or invest in the stock market, and also we do not have any vested interest or conflict of interest which affect our research, our recommendations, our opinions and views about the stock market, about the economy and also the stocks in concern.
Now, as you said correctly, if the research personnel has some vested interest in the stock market, there is a chance that their recommendations could be biased, isn't it?
Absolutely. What happens here is, if someone with a vested interest who trades or invests in the stock market, and at the same time he is advising and he is producing research reports for the same market, what happens is he cannot be independent, because for the simple fact that he has already vested interest, that he cannot be independent in his opinion. For example, if there's somebody who is representing an organization and he is producing research, he is advising on the stock market, and at the same time he is investing in the stock market. So for him to, if he has bought a share, a company, say if he has invested 10 million, and at the same time he is writing a research report on that company, and there may be a possibility that the share price of that company is going to fall in the near future. So if he has bought that share, and if the share price that is going to come down, he is not going to say sell for a fundamental reason, because before he recommending a sell, giving a sell recommendation, he makes sure that he has sold out of that stock, because he is going to lose. Right. So this is why I am saying it is very important that whoever claims that he is independent, he has to make sure that he doesn't have any interest
in the stock market.
Now,
this is certainly an interesting point. You mentioned that you are the only independent research provider in Sri Lanka. Now, does that mean that stockbrokering companies who are considered to be the sole or the main investment advice providers in investing in the stock market are not independent, and that they do have conflicts of interest?
Well, I am not saying that they are not independent. The issue here is, it is very difficult for stockbroking companies to be independent. Right. For the simple reason, because the earnings, the income they generate is based on the transactions they generate. So they depend on the commissions they generate from the transaction they do. So their main focus is making more deals and generating more transactions.
And the larger the deal is, the more commission they get.
Exactly. Larger the deal is, the more commission they get. So they tend to focus more on the larger investors, like high net worth investors as well as institutional investors, neglecting the ordinary small scale investors, because those people tend to generate more income for the broking firm. So it is natural. I don't think it is something unfair, but if you look at from the retail industry, it becomes unfair. But it becomes the inherent nature of the stockbroking industry.
Right. Now, I made a small interruption there, but before that you were discussing about the nature of the program. You were explaining what Vantage Point is, and you mentioned two other points apart from the necessity of the resource person to be independent. You mentioned about the continuity of the program and the program structure.
Yes.
If you can elaborate on this.
Yes, Ashani. If you look at most of the media programs which have been aired and which are being aired, they tend to be more informative, less insightful and less analytical. But this program, we try our best, coming from a specialized research firm, and we are in a better position to give insightful and analytical information that are very useful for anybody who is watching our program. So that is the main differentiating factor in this program that we would like to highlight here. And another point that I mentioned about earlier was the continuity of this program. Being a specialized research, representing a specialized research firm, we will make sure that the content we talk about here is relevant, insightful, as well as there is connection in every program we do here. Because most of the program what we see is that there is in one program they talk about a completely different topic, another program you will see another topic being discussed.
So there is no continuation.
There is no continuation. Here we make sure that there is continuity and there is relevance for the viewers.
And comprehensive content as well.
Absolutely, yes.
Right. So Vantage Point is not just an informative program, but rather a program that provides analytical investment or rather meaningful investment insights to our viewers. So now moving on to the main discussion for today. As a key resource personnel, let me direct this question to you. Now, there is a belief among many ordinary Sri Lankans that investing in the stock market is an option only catering for a specialized cluster of people. Now, is this true, or can an ordinary Sri Lankan also benefit from investing in the stock market?
Well, I think the word, the special investor category that many people are talking about, it is exclusive for that category. The stock market is for that category, and what you are trying to imply here is that this special category of investors are usually people believe that they are English speaking, well connected, wealthy and Colombo based people. My personal opinion is that yes, it was the case especially prior to 2005, but during the last 5 to 8 years I think the investor base has changed significantly, which now includes fair amount of ordinary Sri Lankans from many parts of the world, many parts of the country, as well as from many walks of lives.
So as you are mentioning earlier, prior to the war, there was, prior to the war, investing in the stock market can be considered as catering only for a specialized cluster of people, but now the situation has changed. And with that in mind, we are going for a short break. Please stay tuned. We'll be right back. Welcome back. Now, moving on to our discussion. In your opinion, what really do prevent from ordinary Sri Lankans entering into the stock market?
Well, Ashana, I can point out a number of factors here. Firstly, and in the past, the unstable political, social and economic environment in the country did not give any confidence to Sri Lankan citizens to invest in the stock market. During risky periods like what we saw during the conflict time, almost 30 years, for any person, what is important is to preserve their capital than earning a decent rate of return. But for people who are risk takers, especially the category of people I said earlier, the special category of investors who have better access to information, who are well connected and who have the ability to absorb losses, won't mind investing in a risky environment because of the characteristics, because of the reasons I said.
But for a small investor, this may not be the case.
Yes, for a small investor, he is less connected, he doesn't have much access to information.
Less bargaining power.
Yeah, less bargaining power, I would say less holding power.
Yes.
And also less ability to absorb losses. Yeah. And another factor, Ashan, is that during the bull run that we saw from 2009 to 2011 or so, some of the investment banks who did the IPOs during that time exploited the positive sentiment in the market to price new listings at a level higher than their fair values. So unfortunately, many of ordinary investors who are new to the market got burnt in this period, in these IPOs, because the past experience was that most of the IPOs gave very decent returns, especially during prior to the war ended, because those IPOs.
And even at the beginning, I mean, as soon as the war ended in 2009, late 2009, the IPOs that came in were also, I mean, you can consider they were fairly valued as well.
Yeah, absolutely, absolutely. Now, if we look at the IPO pricing before the war ended, they were more attractive than what we are seeing now, especially after the war ended. So it was mainly because the volatile situation. In a volatile environment, it is very difficult for to convince the investors to subscribe to a share.
Yes.
So what happened was some investment banks exploited the situation after the war ended to price their IPOs at a much higher level. And also, it was unfortunate that some of the broking firms even recommended to buy shares or to invest in shares when the market was at a peak at 7,800 levels in 2011.
In February 2011.
Yes, February 2000, which at that time it was extremely overheated and market was trading at a PE valuation of 30 times.
So why didn't the regulator take any measures to prevent the market from escalating further up?
Well, definitely, the regulator did took very considerable actions during that period. For example, they imposed some price ceilings, and also they restricted margin trading and broker credit to broker credit. So those regulatory action did help the market to adjust to correct levels. Otherwise, it would have been further talked up. I mean, some stockbrokers used to say market even hit 10,000 levels when it was already overheated.
Yes.
So it was very unfortunate, but because for stockbroking companies, it is not the return that their clients or many of the investors, what is important for them is the commission. So more transactions generate, more deals they generate, the more income they get. So their income, their sustainability is not dependent on the returns that their clients getting.
Right. So I think you mentioned some very interesting points as to why many Sri Lankans were hesitant to enter the stock market. But I also believe that there should be more effort from all parties concerned to widespread the capital market investment know-how among the general public in order to develop the capital market. So am I correct in saying this?
Absolutely. There has to be more effort from all key stakeholders to develop this market. Now, I'm sure SEC and CSE both have taken very favorable, very significant actions in the recent past to move into inland areas of this country to create and raise awareness among grassroots of this country. But still, I think there has to be more effort to further penetrate the stock market investments in the country, because that now, after the end of the war, it is definitely a very safe, I won't say, I mean, it is risky, but it has become less risky than what we saw prior to the 2000. It is much less risky because now the environment is stable. The political, economic and social environment is quite stable in Sri Lanka. So that should encourage even ordinary investors to diversify their funds, where if they have saved money on FDs, they could put percentage of those into share market. And also, the stockbroking firms who are focusing on retail investors, especially the ones who are focusing on retail investors, the small scale investors, there are few. I'm sure they should, or they are in a position to publish research reports in Sinhala. I mean, if you look at almost all the reports, the research reports and the recommendations are published in English.
And even like the financial reports, the annual financial statements and annual reports are also published in English. So
absolutely. So that makes quite difficulty for it makes it extremely difficult for the ordinary, Sinhala speaking, Sinhala reading investors to understand what are these.
And so this is really important, considering that about 70% of Sri Lanka's community is Sinhala speaking and Sinhala reading people.
Absolutely. It is quite important for stockbroking firms to publish research reports in Sinhala, so that anybody can, I mean, bulk of majority of Sri Lankans can understand what they are saying about. And also they need to back their advice with research. I mean, if you look at even the research reports done by some broking firms, it clearly lacks substance, and most of them are flowery. I mean, very, very nice languages, and they try to push certain things up. I mean, I'm not saying all, but there are few firms who did that in the past. They may, I think now the situation has changed a lot. Earlier, until recently, what we saw always was sell recommendations. We never had, what we saw always was buy recommendations or long-term buy recommendations. We never had sell recommendations, which can never be the case. Yes. Because there are times the share price is getting over expensive. So at that time, of course, there has to be a sell report, so asking the investors to sell that share. I think that is the most ethical way of conducting the stockbroking operation. I know it is difficult to do because it upsets the company that you are giving a report with a sell recommendation. But I mean, but it has to be done, because otherwise just innocent, unsuspecting investors lose their money.
And keeping that in mind, we need to go for a short break. We'll be right back. Welcome back to Vantage Point. Now moving back to our discussion, I have also heard many Sri Lankans, I mean even among investors, even noise investors and seasoned ones, talking negatively about Sri Lanka stock market. Now, are these concerns real ones or are they fabricated?
Let me answer this question, Ashani, this way. Both CSC and SCC have tried their best to address these concerns, which have been circulating for the last, since the stock market was there. So it started in late 80s or so. I could confidently say at least 90% of the investors who invest in the share market do so completely based on the broker advice as well as with their gut feeling. But they clearly lack the knowledge, investment knowledge and the understanding they should have. I would like to categorize the investor base into two broad areas: the experienced investors and the inexperienced investors. So whether you are an experienced investor or an inexperienced investor, what is interesting is that when they lose money, when the value of their investment falls, they tend to blame the external parties such as the regulator for regulatory actions and some powerful investors for manipulation, and also some broking firms for ill advice. But definitely these kind of incidents, these kind of developments do affect the stock market, but it is only temporary. If anyone who invests in shares which have high growth rates, quality earnings, quality management backed by strong business models, even if the share prices comes down in the short term for the above mentioned reasons, it is highly likely that those share prices will recover and even exceed the purchase price of those shares.
And I think this is really important to comprehend as well. Now, what you are saying is, despite the market having volatility in the short term, it will definitely adjust back to its fundamental values in the mid to long term.
Yeah.
Am I right?
Absolutely. It always, especially in a more normal period like this, it may not happen during a very volatile war period, like what we saw prior to 2005, but it does happen definitely now. Now we are in a very normal political, social and economic environment. It definitely happens. But as the head of the pioneer of independent investment research firm in Sri Lanka, I always recommend investors not to look at investing in shares as investing in just shares. Just consider, think of investing in shares as investing in businesses.
Right.
What happens when you look at that way, when you think of investing in shares, what happens is that there are a large number of factors that affect the share prices.
Yes.
Whereas if you think in terms of investing in a business, then you only need to focus on the financial performance, the fundamentals of the company.
That means the investor has to have a long-term position as well, at least mid to long-term position as well.
Yes, especially the ones who are not experienced, who are new to the market. They need to come into the market with the mid to long-term frame of mind.
Right. So what you are saying is new and inexperienced investors, it's not a good option for them to be speculative on
absolutely.
In
They
stock
cannot
market.
be speculative, because without understanding the intricacies of a stock market, they cannot be. They just simply cannot. I mean, if they try to do that, they become gamblers. It is high risk effort, high risk task for them.
Right. Now, you just mentioned that in the discussion that there are large number of factors that affect the share prices of a stock and the performance of stock market. Now, could you elaborate on this?
Yes, Ashani. When we, as a specialized research firm, when we research on the stock market, we have categorized our areas to two main sections, macro and micro. In the macro environment, there is global macro and there is local macro. And in the micro environment, there is the sector specific developments and company specific developments. So let's look at one by one. When we say global macro, we look at three main regions, the developments in three main regions, in the US, in the Eurozone, as well as in China. Those are the regions that drive the global economy and affect the global capital market performance. It's not just the economic developments we look at, we also look at the capital market performance situation, conditions in the country, in those regions, as well as the geopolitical stability in those regions, Middle East, South Asia and Southeast Asia, which have a bearing on Sri Lanka's economy and Sri Lanka's stock market. So when we say the number one factor we look at globally, a macro situation, are the unemployment rates in those regions, the GDP rates, the inflation rates, the consumer confidence in those regions, as well as the manufacturing data.
Okay.
And when we look at the local macro, since Sri Lanka is a less developed country, what drives the key factor that the key economic factor that drives Sri Lanka's stock market is the interest rates. Other economic data do stimulate, do help, or do affect the capital market performance in the country, but interest rate is the number one factor. So when the
Because
interest
Sri
rate,
Lanka's stock market capitalization to GDP, if you take, it's less than or almost just 30%.
absolutely, it is relatively less than, definitely less than
developed
developed countries and less than many of the emerging markets.
So the factors that you mentioned, you will be discussing these in our future programs as well, I hope. The factors that affect the capital market and of course, in fact, how they affect the capital market.
Absolutely, yes, and that is the whole idea of doing this program. Because what I understood was that many of the investors do not have proper understanding and knowledge to invest in the stock market. If they have, if somebody is providing that, I am sure they will have more confidence to invest in not just in the stock market, but in Sri Lankan economy as well.
Right. So who do you think could benefit by watching Vantage Point?
Good question. It is, many people are asking me, this program will only help the investors, the stock market investors, will only benefit the stock market. Not really. This program, if somebody is watching this program, that person doesn't have to be only an investor. Even the policymakers, the decision makers in this country, businessmen, the professionals, the university students, the graduates and school students, even housewives could benefit, because they could know what is happening in this country, what are affecting, being housewives, they could also invest in the share market. Anybody can invest. It's just that they need to have insights, actionable insights to help them make proper decisions. And so this is not only investment focused program. This also, there is a strong educational element in this, where the students, then the graduates could get practical insights into what is happening globally and in Sri Lanka that are affecting the Sri Lankan economy and the stock market.
Right. I believe this introductory program has been a meaningful one to all our viewers. So unfortunately, it's all the time that we have for today. So before we wrap up the program for today, I would like to thank Mr. Chamikra Gunawardana, the founder of InvestEye Private Limited, the pioneering independent bilingual investment research firm in Sri Lanka. Thank you for spending your valuable time here with us today, Mr. Chamikra.
Thank you, Ashani.
Right. So I'll be joining with you again at Vantage Point in a fortnight on Sunday at 9:30 p.m. on Channel I. Good night.